Hello and welcome to AI Market News by LM. Today we are looking at a market that is absolutely on fire. The S&P 500 has just done the unthinkable and smashed through a historic barrier. So, are we witnessing the dawn of a new golden era of technology or the dangerous peak of a massive bubble? Let's find out.
7,501.24. Let's just let that massive figure sink in for a second. We are in completely unprecedented territory for the stock market right now. But looking at this monumental number, we really have to ask ourselves, is this current market euphoria a sustainable economic boom built on actual productivity gains? Or are we staring straight at the peak of an AI bubble that's ready to pop at any moment?
Okay, let's dive into this. The momentum on Wall Street right now is just incredible. We can practically feel the bustling, frenetic energy on the trading floor. It's been completely revitalized by the artificial intelligence hype. Investors are frantically snapping up anything tied to next-generation tech, and that's exactly what's driving these historic records. It's a level of excitement we haven't seen in quite some time.
Scanning the equity market based on the prepared resources, we are looking at a historic wave of green across the board. The S&P 500 is smashing past 7,500, the Dow Jones Industrial Average is sitting comfortably above the 50,000 mark, and the NASDAQ has rocketed to over 26,600. All three major indices are reflecting an immense wave of optimism that seems, well, practically unstoppable.
But we do need to look beneath the surface of these soaring indices. According to various news commentary, this broader market success is actually heavily concentrated. The rally is increasingly being carried by a very narrow set of mega-cap technology and AI chip names. What this means is that to keep up with the benchmarks, more and more funds are literally being forced to aggressively chase these specific AI winners. It's creating a massive, powerful feedback loop of buying.
Just look at the sheer power of the AI narrative in today's market. The Cerberus IPO surged a staggering 68% in its trading debut. That raised $5.5 billion and proves the appetite for AI infrastructure is absolutely insatiable. Then we have Cisco jumping over 13% after announcing a major restructuring to pivot toward the fast-growing AI inference market. And of course, the heavyweight champion, NVIDIA, is up over 4%, pacing its 7th consecutive day of gains.
Let's move on and see how this builds into overall market psychology. Looking at the CNN Fear and Greed Index, we can see a fascinating tug-of-war playing out behind the scenes. On one hand, market momentum is showing extreme greed. Investors are aggressively buying the upward trend, terrified of missing out. But at the exact same time, safe haven demand indicates fear. This tells us that underneath the public buying frenzy, investors are secretly hedging their bets. They're seeking safety in bonds, preparing for a potential storm.
And that brings us to a major reality check, 4.544%. That's where the US 10-year Treasury yield currently sits, and it is creeping dangerously high. This is the risk-free rate that anchors the entire financial world. When yields get this high and threaten to push even higher, it puts massive fundamental pressure on those long-duration growth and technology stocks we were just talking about. It makes borrowing more expensive and really challenges those sky-high stock valuations.
So, the crucial point we must consider is navigating a shifting central bank landscape. With Jerome Powell stepping down, we have to ask, what does an incoming Kevin Warsh Federal Reserve actually mean for sticky inflation? We're looking at a brand new era of Fed leadership. The market is anxiously trying to gauge if a Warsh-led Fed will be forced to maintain these high rates for longer, or maybe even hike them further, to combat stubborn price pressures across the economy. Digging into the input sources, the stark reality of sticky U.S. inflation is impossible to ignore. April CPI hit 4.9% year-over-year, which is actually an acceleration of 0.3% month-over-month. On top of that, we are hearing directly from the New York Fed that there is absolutely no reason to cut rates given the current data. Because of this persistent heat in the economy, interest rate cuts are being completely priced out of the market right now.
Let's pivot over to the global forex markets to see the international ripple effects of this. This high-yield, high-inflation environment in the U.S. is acting like a giant magnet for global capital. It is strengthening the dollar and absolutely crushing other global currencies. Looking at the major pairs, the euro to U.S. dollar is sitting lower at 1.1631, and the U.S. dollar to Japanese yen has surged dramatically to 158.48.
Now we really need to focus on the yen's historic weakness.
despite an estimated 10 trillion yen intervention by the Bank of Japan in late April, which did temporarily shock the pair lower. The fundamental upward pressure on the dollar remains immense. The BOJ must be in a state of panic because the widening yield gap between the US and Japan keeps the dollar utterly dominant. As seen in the provided information, we also have to factor in massive macroeconomic headwinds that are brewing globally. The geopolitical risks in the Middle East are escalating rapidly. The Strait of Hormuz has been closed, which is severely disrupting global transport logistics. Because of this massive supply chain shock, Brent crude has climbed to $109.05 a barrel. Surging energy prices will only complicate that sticky inflation picture we just discussed even further.
Let's conclude this explainer by checking the investing.com economic schedule for the week ahead, so we know exactly what to watch. We have crucial U.S. retail sales data coming up, which will show us if the consumer is still holding strong despite high prices. We also have Walmart earnings on May 21st, acting as a massive bellwether for everyday spending. Finally, we need to keep a very close eye on the Japan National CPI on Friday, May 22nd at 8:30 a.m. EST, which could easily dictate the Bank of Japan's next desperate move. So the ultimate question remains, will the unstoppable force of AI innovation break through this immovable wall of inflation and macro risk? Only time will tell. This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in this summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.